CNBC TV 18, celebrating 16 years of business leadership.
Good evening and thank you for joining us on Markets Today. I'm Surabhi Upadhyay.
And I'm Reema Tendulkar, and these are the top headlines of the day. The week begins with Christmas cheer. The Nifty ends 1% higher. The Sensex scores a double century. Banking stocks lead the pack.
The mid-cap index, two piles on gains. SR Oil spikes 9% post a successful delisting attempt. 9.25 crore shares tendered at a price of around 262 rupees 80 paise apiece.
Sun Pharma is the top index loser, down over 5% after the company gets a warning letter from the US FDA for its Halol facility.
And oil's not well. Brent crude slides to an 11-year low on fears of a global glut. Brent prices slipped to below $37 a barrel.
Well, clearly, the Christmas week has begun well. We had a flat start, but we picked up pace and finally ended close to the high point of the day, practically erasing all the losses that we saw in Friday's trade, Surabhi. And the good part is nearly 70% of the market actually closed in the green.
Absolutely, Reema. And I think there were several key takeaways there which gave some sense that it's just not completely a hoax rally, so to speak, because a lot of sectors were participating. In fact, almost all sectors, barring pharma, were positive. And of course, banks were leading from the front. We also had good participation come in from mid-caps today. They didn't outperform, but nevertheless, about an 0.8% increase in the mid-cap index. And last but not the least, the fact that it was a very steady rise, as you're saying. There was no choppiness, volatility. So it was a lot of participation. I guess the only caveat being perhaps volumes, that we're in Christmas week. So it's probably not the biggest day in terms of volumes.
Well, I think the next 2 weeks, we're just going to see volumes dwindle and dwindle. But we'll discuss all these cues with our experts. So here's what we've lined up for you on the show. Ajay Srivastava of Dimension Consulting tells us why he's betting on the mid-cap stocks. We'll also speak to the management of Sun Pharma as well as Kaveri Seeds regarding the individual issues plaguing their stocks.
Well, straight to Dalal Street now, where bulls seem to be getting into the Christmas spirit. A strong start to the week, even as market participation remained low. Anuj Singhal is here with the day's market highlights. Anuj, bulls one day, bears the next, but at least, this Christmas week is starting in favor of the bulls, though the ride, I guess, is still unpredictable.
Well, yes, as they say, a day is a really long time in stock markets, and you've seen that on Thursday and you've seen that on Friday. And today again, after Friday's big fall, we had the markets almost reclaiming 70% of the lost ground in today's trade. The volumes were low, so that's, as you said, always the case as you run into the Christmas holidays. This is a truncated week as well. But what helped the bulls today was that a list of heavyweights actually stood up and got counted. Let's talk about some of the stocks then that led the market rally in today's trade. Straight right on top was ICICI Bank. That was up about 3.5%. ITC was up 3% and Infosys was up 2%. When these three I's move, the market moves. Apart from that, you had some of the nifty gainers like ONGC, Powergrid, Cairn India, all of them up about 3% in today's trade. Not just that, some of the stocks like Hero MotoCorp, which was a winner after a really long time, TCS was up 1% and State Bank was up about 1.7%. Some losers then, Sun Pharma, of course, for obvious reasons, but even that stock, despite the US FDA warning, came back from the morning lows. In the morning, it was down 8%. It ended with 4.5% cut. GAIL was down 1% and Asian Paints was down about 0.5%. Finally, then some mid-caps, muted compared to the last few days, but there were some big winners. SR Oil was up 8%. TV18 Broadcast, of course, standard disclaimer, owner of the channel that you're watching, up 7%. And HDIL was up about 6%. We broke the story of some cash flows because of land sales. So all in all, a good day, but once again a warning. We take each day as it comes. Let's see what happens tomorrow.
Thanks, Anuj, for that. But it's time to get you some market opinion. Ajay Srivastava, the CEO of Dimensions Consulting, says that there is a lot of stability in the mid-cap stocks. And he also says that mid-caps will outperform the frontline indices.
There is a lot of faith and hope on the mid-cap story, and the prices looks to be a lot more stable. But I think the Sensex stocks will be a lot more volatile because they have a lot more linkages with global markets, sentiments, futures and options, etc. So that is, I think, a sector which is more at risk than perhaps 60% of the quote-unquote the mid-cap market, which is, I think, a lot more stable today given the widely distributed ownership. We are not feeling good about what we are seeing. We are seeing two of our biggest sectors, IT and pharma, under a threat of a kind which we didn't visualize last year. I still am a firm believer that if you are building a 3 to 5 year portfolio, pharma stocks is a great place to be in. And if these are opportunities, so be it, you buy into them.
All right, let's move on to stock-specific action then. Sun Pharma tumbled in today's trading action on the back of news that the company has received a warning letter from the US FDA for its Halol facility. Ekta Batra is joining in with details. Ekta, what's the view? The market doesn't know the contents of this letter just yet, but what is the road ahead looking like for Sun Pharma?
Well, Sun Pharma was one stock which was under pressure today. It was reacting to the US FDA, which issued a warning letter on its Halol facility. Now, in terms of a couple of key points that the street will be looking out for, will be the content of the warning letter, which will be public after a few days. And then the analyst community is going to pore through it and decide whether the observations are serious enough to warrant an import alert or not. But based on the information that we have, that the management said that it should that the warning letter was largely in line with the observations that were issued by the US FDA earlier, then the import alert probability is low. Other key things to watch out for, whether or not the Halol facility would manage any additional site transfers, or the management would manage additional site transfers. They've got the Gleevec generic, which was an opportunity that they would monetize going forward, and hence that should keep a cap on the stock. But whether or not they can monetize on their other US approvals would be another key factor. $300 to $400 million is what the Halol facility generates in terms of revenues for the US markets for Sun Pharma, and hence that would be another key factor, that if in case it does turn into an import alert, then that amount of revenues could be at risk. It was a mixed reaction really from the brokerages. For example, CLSA said that they view any weakness as a buying opportunity right now, and Morgan Stanley, on the other hand, downgraded the stock to equal weight.
Thanks, Ekta, for that. Dilip Shanghvi, the managing director of Sun Pharma, reiterated that the observations in the warning letter are the same as those mentioned earlier in Form 483.
Our initial reading of the warning letter indicates that it is based on the 483 observations issued in September 2014. I think in intervening period between the Halol inspection and today, I think almost all our major US manufacturing sites, both for dosage form as well as API, have been inspected by FDA. Post the inspection at Halol, almost all our major sites have been inspected by the FDA.
All right, now let's turn our attention to the big international market story. Crude prices remain under pressure, with Brent falling to 2004 lows today. Production is near record highs, meaning that markets will stay oversupplied for the foreseeable future. Brent has been trading at around the $36 a barrel mark, while WTI NYMEX has been hovering around $34 to the barrel. To talk more about oil, I'm now joined by Amrita Sen, Chief Oil Market Analyst at Energy Aspects. Amrita, thank you so much for taking this call. I want to ask you, there is no fresh news that the market has received with respect to oversupply, right? We've known the Iranian decision. We've known what OPEC has done. Why is it that this slide is simply not stopping then?
Hi, thanks for having me. I think the issue at the moment is really to do with very poor heating demand, because if you look at across the world, we've had a very warm start to the winter. There's hardly been any heating degree days in the US and Asia Pacific because of the El Nino effect, which was expected. But what wasn't expected is that even Europe is going to turn out to be as warm as it has been. And the issue is for the crude market that demand has been very good this year. We've had very strong demand from Asia, particularly the gasoline side of the story. But now, if demand isn't very good, we know supply is going to take a lot longer to adjust. That's why crudes come under renewed pressure.
Okay, so if this situation continues, winter is not as cold as was perhaps earlier anticipated, how much lower does crude grow from here? What would be your 3-month targets on Brent as well as WTI?
I think you're going to struggle to get Brent much above $40, $45 in the next 3 months. Having said that, if the winter really turns out to be as warm as December has been, with a lot of estimates saying that lost global demand because of the warm winter is as high as 800,000 barrels per day, then yes, I think the downside pressure can persist. And yeah, you could easily get another $5-6 off Brent. But I think on the flip side, supplies are responding. You have seen non-OPEC supply growth come off quite sharply from 2.2 million barrels per day in January to just 300,000 in November. And OPEC also has a lot of planned maintenance work, which we do expect to start to make a dent into the supply side. So that could provide a bit of a flow, but that's not going to happen till February.
So, Amrita, if US weather ends up being as warm as it has been, would you expect Brent to perhaps even slip below 30?
It is a possibility, simply because they are, they still use a fair amount of distillates in home heating, and also because of the last 2 years polar vortex, we had an additional 200,000 barrels per day of heating oil demand from the US alone. So because inventories are already so full, you could potentially see a kind of dip into the high 20s or early 30s if this continues, especially because liquidity is drying up ahead of the Christmas period.
Okay, Amrita, thanks so much for taking us through that. So this time it's weaker demand outlook, especially on account of December being a little warmer than expected. That's the key reason for the incremental slide that we've seen in crude prices. On that note, it's time for a very short break, but coming up on the other side, Sudarshan Sakhani will join in for a technical check on the markets.
CNBC TV 18, celebrating 16 years of business leadership.